So we have yet another week of crypto under immense pressure. If you have a look at the banter bubbles over here, you can see again on the daily, it is a sea of red right across the board. And I think this is the point of the cycle, at least, where people do start to get a little bit scared and they start to question their biases of where things may potentially go next. So in today's show, we'll discuss where Bitcoin is going in the short, the medium, and the high time frames. I'll also cover some of the major risk factors and the point at which I would actually start to exit a whole lot of my positions where it does get a little bit too scary to continue to hold on. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed, because it is getting scary out there, right? Weeklies red, monthlies are red. Yearly, of course, well, this is a brand new year. Some of the things are still up over there, but we have a lot to discuss. We have to talk about the seasonality. Are things deviating away from the path? Where exactly are prices most likely to go next? And why is this dump happening? Well, the main reason for the dump happening right now is definitely the absolute run here from the DXY, that being the dollar index. You can see breaking out of a strong range, right? You had this range over here, and at one point looked like you're going to break down that range, but instead you started to have this face melting rally towards the upside. Now, there is always a possibility you'll get a deviation back into the trading range, but as it currently stands, we're fast approaching those levels that we previously saw, which caused the Bitcoin bottom over there back with the FTX collapse. Now, they don't always trade inversely to one another, that being the DXY and the Bitcoin chart over here. But for the most part, they do tend to trade somewhat inversely, in the sense that when you get the rally up over here from the DXY, you tend to see the bear markets for Bitcoin, and also same thing as when you put out a major top on the DXY, an ultimate top over there, that is typically where you put in the Bitcoin bottoms of these cycles. So the question remains, what is most likely to happen next? Because this chart doesn't look like it's stopping anytime soon. It looks like you're going to have straight continuation, especially when you look at last week's candle, the wick over here that formed on the DXY. You can see over there, very, very strong. Considering this face melting rally, I'd actually say that Bitcoin has held up relatively well despite this massive run up. So we'll look for weakness over here in the coming days and weeks. Of course, the next most notable level, which is going to be coming into play, is, of course, going to be all the way at the top over here. But you are putting in a little bit of a, at least a gap fill over here in terms of, or not a gap fill, but a fair value gap over there. You are coming directly into that region. So food for thought, look for weakness over here. If you do find the weakness, you might put in the high low for Bitcoin. Otherwise, it is pressure towards the downside, and it is greatly affecting the stock market, which, similar to what we outlined on Bitcoin, is also putting in that bearish divergence. We showcased the bearish divergence just before the end of last year. I got a lot of hate on that particular video, but nevertheless, it is what it is. The bearish divergence on the weekly scale is playing out, and we're seeing the same thing occur, of course, with regards to the stock market. So the stock market will affect where Bitcoin is going to go. And if you look at Seth Golden over here, he says the S&P 500 managed to stay above its 200-day moving average for the entirety of 2024. The only time that it ever did this before, back 2 years back to back, was in 1954 and 1955. What that simply means for you guys back at home is that you should expect that the odds are great that you will see the S&P 500 backtest into the 200-day moving average in the year 2025, right? So he says, however, there is that pesky year 5, right? The pesky year 5, for those of you that don't know, suggests that years ending in 5, specifically for the stock market, tend to be big moves towards the upside. So basically, it means in the short term, you could see the stock market come down to the 200-day moving average. I'll show you on a live chart how far down that is in relationship to the current price action. And then, because it's a year that ends in 5, you're probably likely to see the S&P 500 rally on up for the rest of the year, right? So that's one chart over there. And then you have another guy coming out, Brian, here as well, Brian Shannon, CMT. He says, a great table showcasing how two back-to-back 20% SPI or S&P 500 years does not typically lead to profit taking, but instead does lead to continuation, right? So if I just move my head out the way over there, you can see on average, you would then expect that it should continue up another 12.3%, right? So we'll look at that as well. How far from the 200-day moving average would be 12.3% upside move. Well, here it is. We can look at the S&P 500 over here. Currently, in order to hit that 200-day moving average, you're looking at about a 3.8% move towards the downside, and then you're going to start to tag that key support level. Now, let's just say hypothetically you do come down and that's the level that you hit over there, and then you run the 12.5% up. Well, that's pretty much going to take you just above where those prior highs were. That means you're looking at least on average for the S&P 500 to play out another bounce off of here, continue towards the upside, getting back to 6,296 over there. You can see, of course, we had the warning signs in the sense that you had a bearish chart pattern. We had prices overextended, bearish divergence on the stock markets, and then you came into the apex of that rising wedge, and that's dropping price down. So just a little bit left to go before you do hit some of those key supports. You have your horizontal support, you have the 200-day moving average. If you look at NASDAQ over here, a little bit further to go. It does move at a higher rate than what you see the S&P 500 moving, and that is 5.73% downside. And then you have the Dow Jones, which pretty much as of today should already start to hit that major key support, which is coming in the red box. And just below that red box over there, of course, we do have the 200-day moving average. And for this one to hit that 200-day moving average is another 2.3% move towards the downside. So in the very short term, you could experience a little bit more of downside pressure, and then you're looking for that weakness to possibly occur within the DXY, right? So keep an eye out on the DXY as it does rally up over here. Watch for that potential weakness. Now, if we go through to, of course, Prime XBT, you would have the opportunity to trade these assets, right? So if you do want to short, of course, the DXY when it comes into the key resistance, if you do want to long the S&P 500 or the NASDAQ, you can do that on Prime XBT. They are one of the partners or sponsors that we have. You're getting a sign-up bonus of up to 20%. Use the link in the description below for those of you that are interested. Claim your sign-up bonus. If you deposit $10,000, you'll get $2,000 that you can trade with for free. If you put in $1,000 when you sign up using that link, you'll get $200 that you can use to go long on the S&P 500 when it hits that 200-day moving average, right? Now, what does it mean for Bitcoin? Well, Bitcoin simply is still at risk over here. It's essentially the same as last week. It creates a no trade zone, right? It's a no trade zone until such time as you hit the lowest support regions, and then you can make a decision of what happens next, right? What sort of bounce are we going to get off of those low regions? Or do we bounce and set in a lower high? And if we do, well, that means the next test of those lower support regions, most notably $85,000 and around that $77,000 region, would then lead to a deeper breakdown. And then you could compromise the at least duration of this bull market, because you might start to lose the 21 exponential moving average. So the warning signs that we've had over here, despite the bearish divergences which were occurring last year already into the end of last year, and we did cover that, is now we do have 2 weeks of the stop and reversal indicator trending towards the downside. It is going to take time to break this. These are going to continue to roll over, and you basically want to see price consolidate and hold this trading range. So the unfortunate truth is that the best case scenario that we have right now in this current market condition is boring price action, right? That should be your biggest hope if you are bulls. You're looking for just a lot of chop, a lot of sideways price action. Allow for all the moving averages on the dailies, 3 days, 5 days, and the weekly timeframes to catch up to price, which can then catapult price up, holding at a support and creating that foundation or springboard to get price to bounce off of these lower zones, right? So that is your weekly time frame. I would start to get macro bearish if we do start to hold underneath that 21 exponential moving average, which would mean that Bitcoin would need to lose $85,000, and it would need to spend prolonged periods of time, multiple weeks, at least 3 weeks underneath that 21 EMA, and that would start to roll that exponential moving average over. If that does happen, it starts to shift things. But the important thing to understand, which we're going to touch on in a moment, is that the timing doesn't quite line up with what we would typically expect for a crypto cycle. The crypto cycles have been pretty easy to read from a timing perspective in that they last for 4 years, and they're both heavily driven by monetary policy, what the Fed are doing in terms of quantitative easing and quantitative tightening, and that simultaneously, coincidentally, also lines up with what the Bitcoin halving cycle is doing. Remember, the Bitcoin halving cycle is where that mining reward divides in two. And what we typically see following the halving year, which was already last year, we've already finished the halving year, the year after that halving cycle is typically where you get those parabolic advancements and you lead into a cycle top, right? We haven't yet seen that. So the timing would be off for an end, for the cycle to end right here, as price had tagged this, of course, $108,000 mark, right? I would still fully expect that price should move up into this $120,000, $125,000 level. And then I guess if this lines up with the timing aspects, that would start to warrant a lot of caution if we're presenting all the same metrics, bearish divergences on both Bitcoin and the stock market, a massive breakout by the DXY, that starts to become quite worrisome. So the timing is very, very off at the moment. And it's not to say that the cycle cannot top here. It's just very, very unlikely. Repetition helps people to at least calm their nerves. So I will repeat what I've been saying over and over. I'd give it a 1 to 3% chance that this Bitcoin bull run is over. I think the bull run is still on. It's just a question of how deep do we go in terms of this correction. Now, you are printing a double blue on the BBWP, the Bollinger Bandwidth percentile on the bottom over here. That's showing incredibly low volatility. Remember, these low volatility periods typically create the springboard and the foundation to bounce price and lead into the next major move. But the important part to understand is that they are, of course, direction neutral. So what I mean by that, well, for example, if you look over here, we were, of course, printing that low volatility over there. And when the train started to leave the station and the volatility started to expand, well, we got this huge move. So you could be lining up for something similar like that. Now, you just need to be able to survive the drawdowns within these periods and manage your risk accordingly in that environment so that the volatility over here can reset and you can start to see those momentum oscillators, which is the top chart over here, your stochastic RSI, start to curl back up towards the upside. The RSIs on the daily also turn towards the upside. And that's where you could start to see that next spike up into the high levels, right? So time to pay attention. The best positions are actually established in these very boring, low volume environments, low volatility environments. This is where you establish your position. The best way to trade is actually to build your positions in low volatility and then exit those positions in periods of high volatility, right? Which we have not yet seen. So still continuing to wait for that to play out. And if you actually look at Matthew Hyland's tweet over here, he's identifying something similar, which is the Bollinger Band width, right? He's just not representing it as a percentile, but just looking at the width. And he says the BTC 3-day Bollinger Bands are the tightest since January of last year. So this is one of the lowest reads that we've had in a very, very long time, which means you could still be getting a big move. So as Source Gaming says over there, false move on a Monday. It could be, of course, this downward move could be a false move. And then if you start to reclaim some key levels, you could get a big move up. Now, some of the other metrics that I'm looking at in terms of when I would sell all my crypto and start to exit is more when we get into those heated environments. So again, lining up the BBWP over here, we want to see massive volatility expansion. We want to see it red line into the 90 to 100 percentile mark for multiple weeks. I want to see the timing factors line up. And then simultaneously, I want to see the short-term bubble risk indicator also flashing periods of at least the orange and the red, right? The orange and the red, which we've yet to see, right? Here's the orange and the red. If you throw that onto your screen over there, there it is, orange and red. Those are your price cycles. This is where you top out, right? Your cycles top out in the orange and red. And we've gone so low this cycle that in actual fact, if we just quickly refresh that over there, we were sitting at the 1.25, but we actually recently just dropped back down into the 1.25 level. So very, very low. And that is typically your zone for buying, right? Anything that is below 1.25, which is where we're currently at, is actually your buy zones where you're looking to accumulate or reaccumulate into this market cycle. So I think, again, this just further supports that this is more than likely going to be a longer extended cycle that likely tops towards the end of this year. Cyclically, we're following exactly the path of prior trajectories, what we saw back in 2017, as well as the 2021 cycle. You can see we're right at that point, right? So you need to be able to survive this chop. You may be front running the correction, the correction typically occurred around day 850 previously, right? Around day 850, you start to put in that major correction. Could it be that this time it's being front run? Absolutely, that is a possibility, right? So if you are still in positions and they spot positions in good coins, at least continue to hold. The volume is still coming down. This is a major warning sign. I did update the 𝗬𝗚 members on Sunday about this with levels drawn in over here. And the fact that it's starting to reject, of course, from this underside resistance over here, around the $80 billion of trading volume on exchanges, right? Daily exchange volume that's getting traded on centralized exchanges. That is a bit of a warning sign. You don't want to see that come down any further. This downtrend needs to be broken and prices need to reclaim firstly 80 billion, and then after that the 100 billion was the major key level that we wanted to see sustained volume holding above that level. If you do see that, if you get sustained volume above 100 billion, that's probably where you start to see this risk metric coming back into those heated zones, right? Around the 1.75 to 2. And that's where you start to look for your cycle top. So we haven't yet seen that. Volume-wise, things are low. Now, the volume being low while prices draw down is a very bad thing. It could lead to a breakdown, but you can kind of flip the script over there. If the volume remains low over here, but somehow bulls are able to defend that $90,000 region, that will be a telltale sign that the pendulum will swing back into the bulls' favor. Bulls will have the opportunity to take control, and that could come within the next 2 weeks. I'm going to show you why as well in today's show. And then we'll monitor when bulls do start to take back control. What are we looking at next? Are the metrics turning back up? Is volume coming back into the market? If volume is coming back into the market and we start to create our first higher high on the low time frames, well, that would be a sign that, yes, this was all probably a massive bear trap, a shakeout before the next major move. Now, remember, it's always wise to look at the seasonality because crypto tends to stick to these seasonal patterns. And what the seasonality would suggest, remember, is that specifically when you're looking at things like Ethereum, which is a great coin to look at for your altcoin season index, since it is the largest of the altcoins in the sector. And we know that January, February, March are typically very strong months, and a strong quarter is Q1 of the post-halving year, which would be essentially this year for Ethereum, right? So as it currently stands, yes, Ether is down 3.59% in the month of January, but that can very quickly change. I will remind you, crazier things have happened in the space of just a couple of days, 2 to 3 days in crypto. Remember, the majority of the moves can be put in just a matter of days, right? It's the Pareto principle, the 20-80 rule, right? So 20% of the time will equate to about 80% of the entire crypto move. So 20% of the days of crypto will put in 80% of all the gains that you see within crypto. So pay attention to this, keep an eye on this. Personally, I don't want to fade the seasonality, especially given where we are cyclically in the timing, as well as the fact that all of these short-term bubble risk metrics have been pretty much fully reset, coming back down into what is essentially your buy zones for Bitcoin. So based on these factors, I would continue to hold, but everyone must have a line in the sand. As I've mentioned to you previously, the line in the sand is really, there's a couple of things, but one of them is holding below the 21 exponential moving average on a weekly time frame for multiple weeks at end, and turning that EMA towards the downside, which I did show you, of course, on the weekly chart over there. So we can also look at the summary of all the various different risk factors, because the short-term bubble risk is only considering a couple of factors. What happens if we combine all of these and we throw the whole mix of things in? Price metrics, on-chain, social metrics, YouTube views, subscribers, in terms of what the short-term holders are doing, transaction fees, MRV, Z-scores, Bitcoin regressions from the mean, all of these various different factors. What this simply suggests in a nutshell is, again, we're in the final buy zone. Your last buys would be made at the 0.4 to 0.5 on the chart, and that's what we're currently presenting over there. We are yet to see anything as heated as the price cycles like the 0.8 to 9 or the 0.9 to 1. We haven't really seen much of that even in the past, right? So that's your extremely overheated environment. Right now, we're still in the neutral to slight final opportunities for late buyers to start to enter into the market, not exit the market, but enter into the market. Now, this low volume, as I just mentioned to you, could turn out to be a bullish case scenario as long as bulls can defend the key range low, that being the $90,000 region, right? So you can see over here where all these wicks have formed into the $90,000 region. If bulls can somehow miraculously hold this level up while the volume continues to decline, and then they start to turn price towards the upside and volume breaks out in that environment, that would then be your bullish case scenario, right? So you have a lot of people that are starting to look at things like this. I'll give a shout out to, of course, this chart was shared by Mr. Crypto over here. So Bitcoin potentially putting in a triple bottom. This is what a lot of people are looking at. You have to understand the odds of trading, right? The odds of chart patterns, the odds of all these various different things playing out. Triple bottoms are very, very rare. I don't want to say it's impossible. Of course it's possible, but you have to understand that the higher probability is that if we do revisit these lows, which is the $90,000 level that I've just showcased to you, the chances are much higher that you're going to break that, right? You're going to break below there, and then you're going to catapult down towards the $85,000 level. That becomes your next major support, right? So some are looking at this. Some are looking at a decline in the volume, touch point 1, 2, 3. And if you come down one more time and you just put in a little bit of a high low, you're suddenly going to explode towards the upside. Absolutely, it is totally in the realm of possibility. But if you do lose it, that would be what I labeled the manipulation phase. We spoke about this, right? The sweep of the yearly open. We saw the sweep of the yearly open. We covered this last week as well, the sweep of the yearly open in January 2024. And you can pull up any of your favorite altcoins. Chances are they did exactly the same thing, right? Price in January opened towards the downside. And as you can see over here, you put in your low in the third week of January. So if the next couple of weeks, the next week to two are bearish and you start to see price drop down, look for the mean reversion, the reversion back towards the yearly open, which for Bitcoin right now is coming in, of course, exactly where price is pretty much right now at $93,300, right? And then you reclaim that. So this is your manipulation phase. This is a common chart pattern known as the power of three, right? The power of three suggests that you go through reaccumulation. There you go. You go through a manipulation phase where you sweep below the reaccumulation range, basically wiping out all these people who are buying in that level over there. And then this becomes the hated rally, because at this point they get stopped out. Right after they get stopped out in the manipulation phase, it reclaims the yearly open, and then you go for the absolute expansion towards the upside, which would be the big bad move that we're looking for, at least into $125,000, right? That would be my first upside target that I'm looking at over there. But again, other bearish things that I would start to get pretty worrisome about would be if we started to gain acceptance below that yearly open, right? So if you can't get back above the yearly open, but you just keep rejecting, putting in lower highs, that's going to increase the likelihood that you are going to roll over. And then you could potentially take out this entire move, right? One step at a time. We don't want to panic yet. We'll just continue to monitor things as they unfold, because we have printed the beloved bull moon, right? There it is. Now, I'm absolutely not into astrology or anything like that, but I have found that this has been very, very reliable when it comes to trading. Trades between, given when you're measuring it from, it's between about a 70 and an 80% hit rate, meaning that when you print the bull moon, you tend to get price moving up. When you print the bear moon, you tend to get price pulling down, right? And then you print the next bull moon up, bear moon, price comes down, and so forth, right? And basically what we just printed as of today is the bull moon. So you could see something like this, right? You might see price come down one more time, at which point there is validity to the possibility of the triple bottom price action chart playing out. Low volume, exactly what we're seeing over here. Maybe you see something like that, and then you start to get a little bit of a high low, price spikes up. If you can reclaim $95,000, our yellow line over there, that is where your RSI starts to turn back towards the upside, right? So remember, that is your relative strength index. You can see it's been trending down. If price can get above 95K, your RSI can start to turn back towards the upside, and then you can consider that a full reset. But failure to hold those levels, of course, means 85K, right? We've spoken about this a lot. Nothing's changed since last week. $85,000 or 85,781 is your first major area of support. Your second major area of support, and this is going to be a super high probability long trade opportunity, would be the 50% level, and that's coming in at $78,758. And that simultaneously lines up, of course, with that all-important 200 MA and EMA, which is currently rising towards the upside, right? So that's at 78K. Remember, the 21 is already above that, right? Here's your 21 EMA on the weekly is at 84K. So first area of support, significance at the 0.382 on the daily, plus confluence, of course, at that 21 EMA, just to show you how these things all do line up together. So basically, all will be telling coming into this week. And we do have a catalyst that could play all of this out, right? That could create the volatility for the next move. The catalyst is the CPI data is coming out this week on Wednesday. So 72 hours out, and we should get that catalyst. Probably a little bit of uncertainty for the next 72 hours as people await that economic event to come out, what that simply means is don't expect fireworks. Don't expect the volume to suddenly come back into the market. Chances are it's just going to continue to diminish all the way into Wednesday. And if bulls can miraculously, and the reason why I say miraculously, defend that 90K level is because the more times you hit a key level of support or resistance, the higher the chances are that you're going to get a massive breakout. And we are fast approaching that, right? We're fast approaching that for, I think, now the 6th or 7th time, which means it's less likely to hold. But will, of course, the champion of the crypto space, Michael Saylor, defend that level for you? It is possible, because for the 10th week in a row, Michael Saylor now has posted the Bitcoin tracker, right? The Bitcoin tracker, which shows MicroStrategy's buys. And every single time he's ever reshared this, which is now for the 10th time in a row, the very next day he buys Bitcoin, which would mean today he would be buying Bitcoin. So could it be that he holds prices up just before calamity, before coming down into 85K? And the reason I say calamity is because, you can already see the emotions of the market, and another drop from current price action of 8.4% on Bitcoin would probably drop altcoins in the region of 20%, right? It would be pretty brutal. If you go down from current levels to the ultimate target over there, or the ultimate downside support, it's going to be another 16%, which means in totality, from top to bottom, you would have done a 27% drawdown, right at the point where, of course, everyone was looking for a massive, huge parabolic advancement and complete breakout of the market, which means probably a lot of people bought up here. And I guess that's quite a painful trade, right? Quite a painful trade over there. So you do need to be careful. Let's see if Michael Saylor, the champion, will save the crypto markets yet again. All right, Bitcoin on the 4-hour time frame, you can see the 50 and 200 EMA is now starting to act as resistance. Look at that candle that pushed up into there. This is simply just drawing out on a low time frame. This chart that we have over here using the power of 3. So, that's what you'd be looking at in terms of the drop down. If you watch for the drop down, trade it on the low time frames, and then simply wait for that break of structure, right? But you do have a death cross. You have the 50 crossing below the 200. You have the back test into there. Now, this is very, very useful in trending moves, but very, very useless in a ranging market. And that's up to you. I'll leave that to you to decide, are we in a ranging market, or are we in the start of a new trending market? If this was the start of a trending market, it would be the start of a downtrend, right? Just to be clear. Okay, so total 3 over here, you can see it's going to trade very similar to Bitcoin. The reason I wouldn't be too fearful that the cycle's over yet is because you haven't even taken out the prior highs over there for the altcoin sector. If all of these bearish things were happening while this was trading up at like 3 trillion, then I would start to get really, really cautious. But it's under 1 trillion again. Major support, of course, comes in down at 792 billion. And then you're looking at a breakout above those levels. So let's just quickly see in terms of measuring, how far is that down to the key support over there? That's about a 16% move, right? 16% would be the equivalent of Bitcoin dropping to 85K. If Bitcoin goes to 85K, that's a 16% drop for the altcoins. Okay. Continuing on over here, we do have Bitcoin dominance. pretty much capped right now exactly at the pink line, which is your mid-range. This has been a range-bound environment for the Bitcoin dominance. We're still waiting for a deeper drawdown or proper breakdown. Let's quickly go on the weekly just to refresh your memory and remind you of exactly what we're looking at, right? So you got this high time frame range over here. Here it is. This is your range high. This is your high time frame mid-range, and this is your range low. Simply put, we're also looking for major ejection in the sense that we had the initial breakdown, and you can see the lower highs that are forming throughout, right? So we wanted to see this roll over. With that being said, you also had the inverse where we had the ETH BTC chart putting in the falling wedge, and then you had the rising wedge over here on the Bitcoin dominance chart. So exactly the opposite of what the ETH BTC chart is doing. So soon you would want to see this roll over, right? Now, is it possible that this could be a massive, massive, false breakdown? Of course, it is possible. That is why you don't want to see any candles starting to close above 59%. If you see any candles closing above 59%, this will start to look like it was a false breakdown, and you're going to be putting in a high low, at which point you might actually see a Bitcoin dominance run, and dare I say it, all the way into 63 to 64%, which means you might actually get that trend line all the way at the top, right? So this is why you need to manage your risk accordingly. This is why you need to chart your favorite altcoins against Bitcoin to at least ensure those are in a reaccumulation range or in an uptrend at the very best, but not in a strong downtrend. Because if it's in a strong downtrend and you get this spike up over here, you're really, really going to get hurt in your positions, right? You're going to get very, very hurt in those trades. So let's see, as it currently stands, swing low, lower high, higher low, possible lower high. Let's see, it's trying to make a decision over here, and there is a big move coming. As I mentioned with regards to your altcoins, accurately monitor those. Keep your finger on the pulse. The best way I found to do that, I'll give a shout out to CoinStats. I use CoinStats. This is a phenomenal platform that tracks all of your portfolios. So you can link every single centralized exchange that you trade on, including all of the various decentralized wallets. If you have a phantom wallet, you literally copy paste the wallet address. If you have any EVM compatible wallet address, you just copy paste that in there. It automatically links and will display your exact portfolio, right? It shows you live price action of how the portfolio goes up, down, etc., and the splits, right? So you can make adequate decisions. This is an easy way for those of you who have a lot of coins to know when to cut positions, when to rebalance your portfolio, and will actually provide you guidelines on the risk of your portfolio, right? So if you do want this, there is a sign-up bonus. They're giving you a big discount by using the Crypto Banter link, which is in the description below. There you go. Go to CoinStats, click on that link over there. It is $7 per month, right? $7 per month to manage your portfolio. I think it's well worth it. The richest people in the world all know exactly how much they have, right? Very, very important. Okay, USDT dominance, again, it's going to look similar to Bitcoin dominance, right? Bitcoin dominance is going up. USDT dominance tends to go up with that because Bitcoin is viewed as also a little bit of a flight to safety, at least from the altcoin holders. They'll move money back into Bitcoin and into USDT, and that's why you see both of these charts trading in a very, very similar fashion. Now, you definitely want to see this reject from here. We've spoken about this a lot. Gaining acceptance above the resistance line will start to get quite scary because it will essentially then begin to look a little bit like what we've seen over here on the at least dollar chart, right? The DXY. You can see over there, this is a big, big, big trading range. When you push above that, just like with USDT dominance, this creates havoc in the markets. You ultimately want to see this either hold the trading range or preferably even break down the trading range if you want your risk on assets to rally. So we'll keep an eye out on this. This is probably the scariest chart in crypto right now, in my opinion, because it's looking bullish. It looks like reaccumulation. It looks like it could very, very easily start to break above this 4.35% level, which means expect that 16% drop that we spoke about is probably just around the corner, right? That is a real possibility over there. You can see Solana as well breaking the upsloping trend line. I said, unfortunately, the chances are it's very likely that that will happen because you've had touch point 1, 2, 3, 4, 5, 6, 7, 8, and eventually, after that many touches, you're probably going to start to break this. And this is looking like, a big move down, consolidation, and it's probably going to lead into the next move, which would drop it down to about 162. So let's just quickly see for interest sake, percentage-wise from current level down, that's about another 10 to 12% down. So in alignment with what we said on total 3 would be about a 16% drop over there. So look, if you're already established in positions from much lower prices, you know, risk to reward, it might not be worth exiting your positions where it's going to essentially hit this level, hold the support, and then possibly run it back up, right? So you need to make what the decision that's right for you. The right decision is always to manage your risk, manage your portfolio, and to ensure that you're not experiencing, you know, more than 20% drawdown from your entire entry. And the reason that I say that is because the deeper your drawdown, the more exponential the gains are required to get back, right? So for example, on 20% drawdown, you need 25% profit to get back to break even. But if you start to lose 50% of your portfolio, you now need to double your whole portfolio. That's 100% gain just to get back to break even. So you always want to manage the risk, right? Manage the risk over there. We can have a look at a couple of the other altcoins over here. Let's quickly see, you know, Injective looks like it's going to also revisit back down to the bottom of the trading range. Very similar to Solana. You're looking at about another 12% towards the downside over there. Say losing a key level as well. Say coming back to the range quarterly is about 20% move down. Let's see how TON is doing. TON also looking like it's probably going to at least come back down another 5%. But if it does make it all the way into the range low support over there, then for TON, you're looking at about 12%. So a lot of these across the board are showing the same thing. I see the Phantom chart is gone. I don't know if this is due to the upgrade. So I'll probably have to try and reload that. Let's just quickly try that again. Phantom USDT. Is it still around? Phantom USDT. And can I still get my old chart, the one with all the drawings on? I don't know. Let's go to a new chart then. Let's go to this one over here. Okay, Phantom. So, yep, pretty much range bound. It's obviously lost some key levels. It could drop a little bit lower. I'd be looking at, 49 cents, I think on our last chart as well, was the key area that we're looking at. Let's just see any other outliers over here. I wanted to go to ENA, Ethereum Naming Services. Let's just see ENA USDT. Here it is. This has historically been a strong one, but starting to drop a bit like a stone now, I think, because Arthur Hayes moved, if I'm not mistaken, it was something like $15 to $18 million worth of tokens that he had staked. He started to move them back to Binance. So a little bit of panic setting in on ENA. If you are in the ENA trade, expect that it's going to hit 27.90. That's going to be your range high. But the real question is, do you hold it? Expect it is definitely going to hit that level. It's just a question of, do you hold it and do you do this? Or is it going to be a complete deviation back into the trading range, at which point you have to look way, way, way lower, which we'll address at a later date, right? So that's that over there. Let's see how ETH is doing. Okay, ETH expect coming back down to mid-range over here. It's probably going to sweep below $3,000 to liquidate a whole lot of people. I know the liquidation level is situated somewhere around 2,800. And as you can see, that's again around that 10 to 12% drawdown to sweep that mid-range. So a little bit more pain ahead of us by the looks of things. If we look specifically at least SUI chart over here, I think that SUI could very, very easily come back down to 390. Despite the fact that it is still in an uptrend, putting in higher highs and high lows. Just the way that these candles are starting to form over here tells me it's probably going to sweep this level and drop down into 390. And that's going to be the next major level of support. That is for SUI at least another 12%, right? 12.4%. So very, very, very similar. A lot of these coins are showing around that 10 to 12% level. Mantra still looks pretty strong, holding up over here, following this absolutely massive move, just range bound, only down 1.3% today, which is really nothing in comparison to the rest of the coins over there. Let me know in the comments, what else is there to look at? Render, yes, let's have a look at Render. How is Render doing? There's Render down 4% today. Major support is coming in back to where a lot of the coins are going to retrace back to where they did on the 20th of December, where that low was. That's about an 8.73% downside move before Render hits major support at 625. Okay, Rune, how's Rune doing? Rune got absolutely killed the other day. Let's see quickly what Rune's doing. Has it recovered any of that, or is it getting worse? Okay, 2.4% down. It is getting worse. It's consolidating right into that low. You got no sharp reaction out of there. Not necessarily a good sign. Look, if you do the full send all the way back down, you're looking at 199. How far down is 199 for Rune? Let's just see from current levels. That would be 38% move. So that seems like a little bit of a stretch, a bit of an outlier, but you definitely want to see some reaccumulation because this was straight down and now you're consolidating, right? That can start to create a bear flag. Strong move down, that's your pull, create your flag through the consolidation, and that can easily drop it into the next move down. Okay, there's questions around Pendle. Pendle was also historically one of the stronger ones. Let's see how it's been holding up. So Pendle down 5% over there. Okay, also just rolling over, right? Rolling over, absolutely getting smashed. Major support coming in at $3.31, right? 3.31. NEAR, let's have a look at NEAR. Down 5% on the day. Look, also fully retracing once it takes out the December the 20th low, or December the 20th low, then it's possible this is going to drop down to 347. So the reality is that the bears are absolutely in control in the short term. You have to understand that. We have a couple of high impact events coming up, CPI, and then we of course have the inauguration with Trump, and then we have ultimately after the inauguration will be the FOMC decision on what they're going to do around the interest rates, and that's where you look for the key terminology shift in their statement, whether they're actually going to pivot into quantitative easing. We haven't yet seen that wording, right? They continue to say that they are selling assets and securities, right? That's what the Fed have been doing. Until they start to buy, it becomes challenging. I don't want to say that completely bearish, but it becomes a choppy environment, right? A very, very choppy environment, exactly like we're seeing. There are some free opportunities, though, out there, free, where you don't have to pay a cent. One of which is Funtico, right? So you can go and have a look at the link in the description below. I got a lot of messages about this. This is why I'm bringing it up again, guys. About 1,000 of you probably must have messaged me from the last show saying that you wanted to play the game. You wanted to race the cars, but for free. How do you do it? This is how you do it. Please do these exact steps. Go through to the link in the description. Go through to join Kyle's racing team. We're racing against Fefe and Ran, right? So our team is racing against Fefe and Ran. So you have to click that link. When you click that link, it will bring you through to this page. When you go through to this page, there's going to be an option over here where in the middle where you can click there and you can sign up, right? You put in your email, create a password that creates a profile for you, and then you've been signed up so that you can play for free. Once you've done that, you're going to go through to loot packs. Now you're going to click there on loot packs. So I'm already signed in. I've already done the process. That's the part where you put everything in. You had to already be signed up. And then it's going to take you through to this page over here where you'll go through after loot packs to claim your reward, right? And then you'll come over here and now you can choose which race do you want to go in. Do you want mini ticket, maxi ticket, semi-finals, finals ticket, and then you can join into the actual race. So let's just quickly see if I can show you what the racing, the tournaments are. There we go. We can go through to the tournaments over here. Why would you do this, by the way? Well, what's the benefit for you? Well, if you win, you can win $15,000, basically, right? So this race, the particular one that I'm talking about that you have to capitalize on, ends in about a week's time. I think you have 7 days left to specifically participate in this one, right? So where is the race over here? We're going to be doing it's like a Super Mario Kart type of race. The links will take you there. I've already opened up my whole profile, so I'm not going to be able to show you exact, but the links will take you there. I don't want to claim my reward yet. Otherwise, I have to start racing on the show. But use the link below over there. Check it out. And then you can earn more tickets. If you run out of tickets, go through to earn more tickets over here. Similar to those other games where you tap on Telegram, you can also tap to get additional tickets once you've used your race tickets. That's how you access it for free. Okay, let's see. What else have we got, guys? Let me know in the comments. Someone asked what happens if you run out of attempts. That's what you do, right? So Elodia Cruise, if you run out of attempts, you go through to this over here, join Telegram, click the taps, and then you'll get more tickets. Okay, let's go. 𝗪𝗡𝗪𝗓. There's a question around 𝗪𝗪𝗓. How's Casper doing quickly? Casper almost at range lows again. So this one's on its way back. I'm sure the Casper community are highly frustrated after a year of chop, but 14% down and you're going to hit that range low. 𝗕𝗓𝗡𝗑 was the question. Let's go back to 𝗕𝗓𝗡𝗑. Here it is. Okay, 𝗕𝗓𝗡𝗑, there it is. Okay, also dropping all the way back down. You know, you could put in a bit of a double bottom over here. At this rate, it looks like it's going to threaten the low that occurred on 20th of December. And I do expect it's probably going to take that level out, which means I'm looking for a move at least down to 1260, right? At least 1260. So do be careful of that. Okay, that is 𝗕𝗓𝗡𝗑. I just want to see, is there anything else that we need to look at over here? Let's scroll through our list. All right. Okay, how's MOG doing? Okay, MOG starting to distribute as well. You know, ultimate major support is coming all the way down at 1330. So a lot of those gains have been given up. But remember, risk can return into the market in a big way. If things start to go favorably in terms of the economic data, you know, you could easily start to see these sort of V-shaped recoveries where you have a massive macro high low. Okay, how's 𝗕𝗓𝗓 doing? Let's quickly go to 𝗕𝗓𝗓 as well. 𝗕𝗓𝗓𝗓𝗓𝗓, where are you? There we go. Here's 𝗕𝗓𝗓. Also getting dangerously close to distributes all the way down. So do be careful of that. If you do, that's literally the next level I'm looking at would be around this 1212 or the last 4 digits coming into this zone over here. All right. I see there's a lot of requests around Goku. Someone's asked about 100 times over there. Mega Lux. Here's your Goku chart. Still defending, forming that trading range between about $10 and $20 million market cap. I think it looks really, really strong. Still good, at least in my opinion. Really holding up over here, but similar to the rest of the market. As soon as the market goes risk on, you will see this rallying really, really nicely. MicroStrategy, another one to look at over there. You know, we spoke about the possibility of it coming all the way back down here to form a high low 246. If not, major supporters at 184. But similar to Bitcoin, right? Low time frame, it's in a downtrend, but keep your eye on the price, right? You have got lower lows and lower highs, lower lows and lower highs. But maybe you'll start to put in a high low over here. If you do, that could be your first sign that the trend is beginning to shift, right? All right, that's it from me, folks. I'll catch all of you on the next one. I hope you have an absolutely stellar day. Remember, for those of you who also want to join in the private Discord group, Whale Room, the link is in the description below. I'll see you all on the next one. Have a great day, everyone, and cheers for now.